how to get up to $26,000 per employee in a refundable payroll tax credit. 0% interest for 6 to 18 months, up to 150, if not 250,000, while also building your business credit at the same time. Up to 2 million, 5 million, incredibly fast funding without collateral, no hard credit checks, bad credit is acceptable, and lower documentation. Even if you have good credit, you have collateral, we're going to go through those. And getting an SBA 7A loan, a Hybridge, a combination of, in the meantime, waiting to get approved for that SBA 7A loan. In the meantime, you can take bridge funding, meaning there's an unsecured term loan of 1 to 2, sometimes 1 to 5 years. You have a merchant cash advance. You have a line of credit. So you can do a combination, an unsecured term loan with the line of credit, a merchant cash advance with the line of credit if you qualify for those. And I'm also going to be getting into a segment of protecting your personal credit. And that's where more so I want to start off with. But before I do, please let me know. Give me a wave if you're here right now. Let me know where you are tuning in from, what part of the world, what time is it over there. I get a lot of people who do show up to these. And then if you can't make it, it's okay. But I will try to put the replay up back on YouTube if that's the case, and you guys can view all the information there, replay it, and go into the description. You're here on TikTok or another channel that's streaming, you can go to the bio, click the link, and then you'll see a full set of buttons. The very first one is the one I most recommend. Click that one, fill out my questionnaire form, and then I'll be able to evaluate, analyze you, and get you a very personalized and customized email response on your best funding option and options. See, this is what happens. I was watching a bit of the World Cup earlier, and go Morocco, they beat Spain, and I was working at the same time, and kind of was focused on one thing, but I was doing a few other things at the same time, and just it's kind of what happens when you have days like that. And so what I want to touch upon right now is the personal credit. I have a document that I put together myself, and with the list of extensive experience being able to do this, I know each and every person's problem, pain points, where you're coming from, what actual roadblocks and obstacles, and what results you're actually looking to see. What are your outcomes or outcome? But first and foremost, in this market, you should be protecting your personal credit. And it's no surprise if you know this already. And again, I've been in this industry for so long and trying to help people understand that you have to differentiate your personal and business credit. Bottom line, it doesn't matter if you cannot qualify for an SBA loan, a veteran assistance program, a community advantage. You have the microloans of the world, the 7A, the 504 loans. They're going to look at your business credit, and they're going to weigh a proportion of that towards your personal credit and how well you'll take care of the two of them. And if you have none of that, you could forget about that service. Yeah, you might have stronger personal credit. You might have had a little bit of a dip on your business credit and so forth. But if you don't have that, a business liquid credit score of about 155, if not sometimes 145, not 135. But the majority of the time, you have to have a strong business credit profile and make sure you have enough trade lines. Even new ones are okay because it's underneath your business. But if you're focused on getting a business loan and you're leveraging your personal credit, this is no surprise, but 35% of it makes up your payment history. And without going too specific into each and every one of these, I can make this a whole separate video on personal credit. But what extent of history over a period of time, if I looked over just 1 year, if I looked over the 2 years, a maturity of 2 years, if that were the case, what could I see reporting over those 2 years? Your first year is possibly the most hardest, and that's the one you want to keep up to date the most. You want to make sure you make your payments on time, take care of everything. Transitioning into that second year, it's just as important, but you already have payment history after that first year, and it shows us a repeating pattern of how you're paying your bills, making your debts, mortgages, car loans, whatever it is, you're making those payments on time. And so when you go to apply for a business loan, that payment history shows this creditworthiness. And we ideally want to see more than 1 year. Yeah, you can get in with 4 or 6 months. It's not ideal that that's going to be something that declines you. But in higher tier services with those lenders that I always work with every day, if I'm not even submitting files to them, I have meetings with them. They talk to me. I know them personally. For the majority of them, I know them on a business level. And they come back to me and say, hey, Michael, is this going to be a file that's going to be sitting on the fence, or is this somebody who's going to actually take action? We see they've been submitted, But with our history, we know, are they going to be serious or are they not? And so a lot of people just dip off. So be very careful. And this comes back to don't have too many inquiries. I'm going to go into another percentage in a moment, but do not have too many, even if they're soft pulls. It's not going to be a huge reflection if it's a hard pull, but a soft pull is enough of an inquiry for a lender to associate that with being bad. They can see you applying and putting your credit out there all the time, whether it's a soft pull or a hard pull. And that's why a lot of lenders, they pull away, even if it's not the one you've applied to in the past for a business loan and other types of financing and other things, auto loans, whatever you're talking about. They're going to see these. And they may deem you not credible. They might not see you as an applicant right now that they can take on. You might have to clean some things up. I've had people with collections, a lot of derogatories, a lot of late payments, foreclosures, bankruptcies, liens, open, not closed, not taken care of appropriately. So make sure you don't have too many inquiries. And when you're getting a business loan specifically, because again, as an expert, I do this every day. And so I have people getting approved for right now millions upon millions, 10. I have 5 to 1 million and below, 500,000, 700, 800. I have less than 100,000 and even more than 10 million when we're talking about different types of higher tier loans. But the same thing applies to each of those individuals. Keep your credit where it is. Even if it's a hard pull at that point of a hard offer, if that's the case with that type of service, make sure you rebound. Make sure you make those payments on time. That's when it's more crucial, is when you have to rebound. You have to take a slight hit. Now, I can't tell you how many points that'll be. It's different for each person, different for each service. But it's the same thing when you go get a car loan. You close the lease and you open up a new lease, right? I've done that many times, so I know how it works. I can't walk into an auto, the dealership, and I don't know these. I know these things, and I know people who work there. I've had past friends who worked in that space. I have a really good friend who works in there. He does his thing, and so I know how they operate. And so just like that, you have to learn how to rebound and make sure that you're on time making those payments, because when they see you, the creditors, when they start seeing you making those payments on time for that car loan, that business loan, whatever that is, yeah, your credit then will come back up. Hey, I paid it off earlier. Hey, I made a one-time payment of this. Then instead of doing it over 3, 4, 5 months, I was able to do it much sooner. And there's a bigger payoff sometimes to that. Not always, because there might be other setbacks that you have on your credit report, and depends on how much of a payment you're making as well. But payment history matters. Make sure you take care of that. I don't want to go too in depth. I can go into this subject a lot longer. The debt, that amounts that you owe. Now, this makes up 30%. This is a tier below. The 35% is the highest with payment history. And then we have debt, the amounts that you owe. This is one that I commonly deal with a lot of the time. All of these I do. And I've seen it a lot more now than I've ever have, about a lot of people taking on a lot of personal business debt, more than you can handle. And it affects your debt to income ratio. It will affect how much you can actually borrow. I have people who could get approvals from 40 to 120,000 for a personal loan just by itself. Not another type of financing, not an SBA loan right at this point, but a personal loan. If you could get between 40 to 120,000, but once we go through the underwriting and we look at it even more carefully, we go, hey, you just took out another loan. You have 2 loans. You have more debt. You said you had none. What happened? Now you took on 80. Now you have another one for 120,000. So you have 200,000 in debt. You haven't even started making payments for. Not even 1%, 5%, 10%. Even if you're at 10, 15, 20% of that. Not even 50% and above is what we want to see. We want to see closer to 80 to 100% of it being paid off. So that will bump up your debt to income ratio closer to that 100%. And there's a reason why you don't get any, or you very much get a little bit. And it's because you have open lines. Feel free to make your point of view. If you do respectfully disagree, I'll take that. That's fine. I'm open to anybody having communication. But what I'm not open to is somebody who says something and they don't say anything after that. So I'm going to continue going on. That's one point. Payment history we just went into. The debts, the amount that you owe. Make sure you're taking care of that. If there's anything in there that you have to refinance it. Because if we're looking at getting you a SBA loan and we're looking at your debt service coverage ratio at that point, then okay, well, we might need to refinance some equipment loans. We may need to look at some other debts that you have to drop the amounts. drop the interest perhaps, and then we look at saying, okay, we can increase your debt to service coverage ratio number. And then what that does is that gives you more flexibility for the amount of funding that we can actually give you. So I have a lot of business owners who actually are going through wanting to do some refinance situations. Maybe there's a consolidation phase. And I'll get into consolidating in a moment, but I just want to carry on forward. That's pretty self-explanatory. Make sure you're paying your debt and paying your debt on time, paying it off early if you can, and getting that amount owed and taken care of. You're saying Wells Fargo doesn't even look at your credit or debt to income ratio for business loans. I didn't ever mention anything about a bank loan, just in case you were wondering. So my point still stands on a global scale. And when it comes to private lending, it's very important. Now, there are certain banking institutions, you could say credit unions, etc., that may not look at it in that regard. They might not take a deeper look at that. Now, that's different. I didn't say it specifically. I never said specifically Chase. I never said specifically Wells Fargo. I never said specifically US Bank. Now, if that's a topic we want to get into, that makes sense. But let's all listen in a little bit more carefully and let's pay attention to the topic at hand. I'm not saying you're not or nobody else in here, but let's not jump the gun and say, hey, this doesn't make sense. No, let's ask a question. Let's say, hey, no, does it really work this way? Or, hey, I don't think it works like this with the Wells Fargo. Is that what you were talking about? No. So I'm not ever, like myself, I'm never assuming when I jump into a conversation with somebody that that's not the case. But it is very important regardless. Even at a bank, they're going to look at credit. Credit is just as important as if it were a private loan. Now, the things that are happening with the bank right now, how much they're lending and how to the extent that they're looking at, that's another topic. That's another rabbit hole that I can go down. But for this conversation, let me get back on point and talk about the length of credit history. So length of credit history, it does matter. Obviously, your payment history, your length of history, that does account for 15% again. But you just have to understand that you're going to be deemed more creditworthy if you have better history. And those approval odds for what they can give you, whether it's a credit card or a business loan or a personal loan, startup loan, they're going to weigh that. They're going to be looking at this. They're going to be communicating as well with within that history who you've been paying. Like don't you think they would communicate with somebody like a past employee or a past employer you worked under? That's what these companies and these lenders and underwriters are doing on their behalf. They're fact checking. They're looking at everything. They're looking at that resume and going, if I need to call this person, I will. Or how do I communicate with them if I need further information? That's what's happening. Not all the time, because there's a surface level look, there's a deeper level look, like we're talking about a little bit. If we went into more of a banking situation, then we can talk about different scenarios there. Doesn't always apply to everybody. But just so you know, that's the length of credit history. It does matter. It does deem you in the eyes of a lender more creditworthy. Make sure that it's been looking good. Your trade lines are positive, not negative. If there's anything negative, you want to take care of that, if that's a form of credit repair or not. And any new trade lines, be careful about just applying for buying new trade lines. You have to be very cautious of that. Now, if there's a guarantor part to that and how you can be on a primary account, things like that, we could talk about it another time. But be very careful about what you're buying out there, what you're putting on your credit profile, because lenders can take notice of that and see that it's not truly built by you, or how it was built wasn't legitimate, or if it was legitimate, there's not enough in it to justify giving you enough. Something's expired, or it's more old and outdated, that they don't weigh that as heavily as they used to. So be very careful of that. Do not, I have a lot of clients right now who do end up closing their accounts. Do not ever close an account. I don't want to get too specific to that, but that will report pretty bad. And closed accounts hurt you more than let's say you have an open account, but it looks bad. Like you have an open account, you have these trade lines, whatever you have opened, and it doesn't report properly. Well, that's better to have than to say, hey, I'm going to go close my account, because that will still show up, and whatever you have, it's going to affect you. When you go get business financing, that's something that can appear, and then they can report that, and they can see, okay, while you had a closed account here, I mean, whether you could have made your payments or not, what was the issue here? And it's going to hurt you. There's so many levels to why you don't want to close an account, but I don't want to jump into that again just to get so deep into the personal credit side. Welcome in. If you need funding, like I haven't said it earlier, but please respectfully go to the bio, click the link, and then access it. Go to the questionnaire form, fill it out. I'll evaluate, analyze, and give you a proper response. And if I have or have not, for those of you in here, I have been quite busy today. I've been working on a lot of SBA loan deals today. I do have clients who are getting unsecured term loans, lines of credits, cash advances, and all types of loans, equipment loans, real estate. But I'm working a lot of deals today, and so I've been extremely busy. I probably have another 10 or so minutes. I'm not even sure how I was even able to jump on here. But I know it's very important for you, and I want you to have the information you need to make the best decision. So credit mix. Are you properly putting the right accounts on your credit profile? You're not just sprinkling one big thing and you're just leaving it there. Lenders want to see multiple trade lines, multiple accounts being built, and that you're continuously building underneath those. That's what they want to see. You're making like a subset. Like I kind of go back to my SEO days, and I still do SEO a lot, like blogging. When I'm putting a website together, I'm thinking about the categorical structure. So I'm thinking about the menus, and I'm saying, okay, here's a menu I have for this. Here's a menu I have for that. There's another one for this. Now, underneath those are different subsets of that same navigation topic. So I'm listing things underneath those, and I'm keeping them positive. I'm not doing anything shady. I'm not reporting anything negative. And if, again, it's like that, you have to take care of it. Don't just close an account and say, hey, I'm done with it. Now I'm going to go reapply, or I'm going to go do an application now. You should have waited at least 3 months, 6 months. Now you got another inquiry. It's kind of like you're starting from scratch again. So you have to be very careful. And I can go so much deeper into that, so many scenarios, even with friends and family that I've tried to help with this. And again, I work on a lot more on the business lending. I know the personal credit side, and I know you may see somebody else who talks about that, but I know this stuff too because of what I work with. I've worked on this for myself, and I keep up to date with everything. I'm monitoring my own credit personally and in business, and that's what each and every one of you should be doing. Which, by the way, bio, if you guys click the link or in the description, you guys can pick up my free Building Business Credit video series, and it goes way in depth. It shows you video content in the system that I'm able to use and leverage. So have a good equal amount of credit mix. Spread it out. Don't spread yourself too thin. Make sure you're opening up more trade lines. Make sure that they're aging trade lines, because that's what's also going to help you. Something just new and not even reporting, or very little is reporting, that's something that not a lot of lenders want to see, especially if you opened up a lot of them at once. You already have other loans and other debt. If you already have other debt, you have other new trade lines. Like, you're only going backwards for yourself. You haven't cleared the debt. You haven't taken care of it. And then this is what's happening, and you're getting a limited amount. So you have to think about what's my opportunity cost of taking this financing? Well, it's not what I wanted. Well, what we have to look at first is taking care of that debt you have first, and then working backwards from there. So in other words, as a business owner, you have to look at your existing debt, especially as a startup. How much debt are you taking on? Overhead expenses? Boom. Are you generating the revenue you want to generate? Have you reverse engineered your profits, what you want to be making at the end of the year, at the end of the next year, 3 years? I don't know if I'll be here now, but this is what I'm shooting for, my goals day to day. And you work for that. But you got to have a better understanding. Again, that goes back to the other 10%, that the last part here, it's the new credit. It's kind of more or less what I have already said with opening up new accounts. Just recent credit jumps or gone up or down. That can also have a bit of a consequence, because if you're the individual, who we go back to payment history, we go back to the length of your credit history, the debt and the amount that you owe, and then the credit mix. So if you just opened up new credit, if you got new credit, a new credit card, whatever it is, we're also going to be seeing everything else that you've done in the past to make a better decision. So if we've seen you haven't been making your payments on time for this amount of time, like, what makes us think that you wouldn't do it again? You have to give us a better reason. You can't just say, well, hey, I was in a difficult situation at the time, but I'm better now. And okay, and then we ask you, so, well, you have to make payments for this sort of thing again. Yes, I will in the next month or two. How much are you going to be realistically taking on? 20 to 30,000. So back then you were taking on 60 to 70. Now you're taking 20 to 30,000. So what makes us believe that you'll be able to make your monthly or whatever your payments are to that? You have rent obligations, you have mortgages out there that you have to pay, whatever you're doing there, however you're saving, however you're spending, your overhead, everything, your cost of producing the goods, your raw material that you have, everything, cost of goods sold. But I don't want to spend too much time. There's more that I have there. And I've created content already on improving, fixing your personal credit. So I'll leave you guys that in the description or in the bio. And if you guys need credit repair, I work with one of the best in the industry. I know him personally as well as in business. And he'll do a very good job. And I outsource my work to him because he's the one that primarily focuses on that side. I did it, again, a long time ago for some time, but I wanted to focus on business financing in terms of the upfront business credit, etc. But if you guys need help with that side of things, you guys can visit, again, the bio and or go to the description. Now, let me jump over to this 0%, or actually, yeah, let's jump into the 0%. So this kind of ties into this. 0% for 6 to 18 months and up to 150, if not 250,000. What, if, what, where, when, how? I know we have those questions. I did. But you have to think about what you're getting yourself into first. So this is a credit line hybrid program. This is where you're stacking multiple business credit cards at truly 0% APR for 6 to 18 months, depending on that credit issuer, the credit card you get it with. Wells Fargo, Chase, US Bank, the list goes on and on. 6, sometimes you get 12, 18 months with certain cards, up to 50, if not up to 100 plus. And it can expand from there as you grow your limits and as you continue to use them. So being very strategic on how you take these funds. Like recently I've had business owners who, from all types of backgrounds, right now I'm working with all of them, honestly. Like the last person that I spoke to was in the construction, building, luxury home building space. And another one in the just not luxury, but more custom home building space. And, they're like, Michael, what's this 0% interest for 6 to 18 months? And I know they can qualify for business financing because they're doing about 200 to 250, if not 400,000 per month. And so if that's not enough, or it is, they want another alternative where they can use it for different products and services that they need, some things that they need to make lower purchases for so they can keep their payments down. And it helps them after the 6 to 18 months. That's being smart. You're leveraging the right cash flow you need right now. That'll also help you give you more leverage in the future. So think about what you have right now in the bank, what you don't have in the bank. Can you use more? You're not keeping more, you're withdrawing more. And that's why you're having a cash flow deficit. And it's not necessarily bad all the time, but you're like, I want to have more. I cannot just stick with this 150,000. And I've been doing it for the past 2 years. I need to learn how to improve my cash flow. That's ultimately what I also help people do. Is I go through everything. I go through the profit and loss. I go through the P&Ls, of course, there, the tax returns, personal and in business, the balance sheets. And I understand better strategically. Like I think about them, and I think about them very thoroughly. And I go, okay, I see all the debt you have. You have no interest right there. You have no debt right there. Now you have this reporting at this percentage. Now, if we work backwards from this amount that you're spending on expenses and the overhead you're keeping here and your revenue, here is what you're doing to generate that revenue, we can kind of slim this here for a period of 2 to 3 months and then focus on this one service or this one product alone that you specialize in very heavily and work on maximizing that same clientele right there instead of going after a new audience or going after a new service, always producing a new product, always purchasing a new piece of equipment. It's not about trying to purchase 4 to 5 extra trucks if you can't even operate them. If they're not going to generate you the income, if they're going to only get you to go backwards, in about 3 months' time, you'll lose an employee. So now guess what? You just revenue, you dipped about 20 to 30,000 there because of that one piece of equipment. You think a lender, an SBA lender, they're going to want to ask a lot of questions. And I get that feedback from my SBA 7A lenders, depending on what lender that is. Each situation is different. So I can't submit you to one primary lender and then another person the same one all the time. It could be different. So 0%, that's the business credit lines or the credit line program, because you're also building your business credit on the back end is what you could do and get access to vendor credit. You can do that at the same time or vice versa. You got into business credit, attaining vendor credit, Ulines, Grangers of the worlds. I could go even deeper to this and show you guys the system, which I do as part of the business credit building video series. But without having the visual, I can't really get into it all. And it's some of it I can't disclose because that's my sensitive information. But it'll show you like the profile. Look, I have this established, boom, boom, boom. People who get a credit line, they could start off with 20,000, 14, 5,000, 500 if anything. But you build over time. What would 14 to 15,000 right now do for you and your business? You got to question that. well, it's not the 100,000 that I wanted. And it's not going to be the 100,000 that you always get. I always hear it every single day. Michael, I want 200,000. But the person who comes to me and goes, I'd like 200,000, but if I know I can't get that, that's just a number I'm shooting for over time. Boom, you just said what I didn't need to say. Because I was going to come back to you and say, with everything that I know that you have, getting about 200,000 doing 10,000 on revenue-based financing is not going to work. So there's the 3 C's: cash flow, credit, collateral. If you don't have enough cash flow, you're a startup, or you've been in business for some time but not enough cash flow, not enough revenue, anything coming in, and so forth, then we look at collateral and we look at credit. No collateral, then we look at improving your credit. Or do you have the credit profile already? Okay, you can't work off of credit, then we work off collateral. We don't have to look at your credit. We don't have to have a credit requirement. All right, then we look at revenue-based financing with at least a 500, if not 450 or so FICO credit score, depending on that service. But which one of these 3 or all of them do you have? So I work with business owners of all magnitudes. And I know this for a fact that a lot of people are pretenders in this space. I know a lot because I've been in this space. I know everybody's psychological way of thinking. And that's not from a marketing perspective. You can hula hala, whatever that is. It's because I've received funding myself. Business credit, personal credit, business loans, cash advances, the PayPal freaking loans, the loan builders. And I'm tired of people who come to me and go, well, I'll just take time to look at it. I'll just get back to you. And then they end up going to go submit their credit to somebody else. I don't care if it's a soft pull. Soft pulls can still hurt you. And then they're a robotic answering machine. And then you have Susan or a Karen or a John. Hi, how can I help you? And I'm not saying that as in a mean way, in a bashful way. This is just to be giving you some tough love. That's not going to work. When are you going to wake up? I had a business owner the other day. I don't care if you're doing 4 or 5 million a year or a month. I care, yes, how it's going to help you. I care about that. What I'm saying is I care about the person. Who's the person I'm working with? If I know this isn't going to work because your character just stinks, it just sucks. Like you haven't worked on anything. You haven't worked on yourself. Like that doesn't mean I'm going to ignore you. That just means, hey, Mr. or Mrs., get this fixed. Hey, how about you read this book right here I got for you? How about we take some time and read a book like Atomic Habits? I've actually read this book. I'm not going to lie to you. I've read this book probably 15 times. I'm not even joking you. And it's because it keeps me here. It keeps me rolling in. And it keeps me appearing. It keeps me showing up every day. I'm not exhausted at the point of waking up wondering, oh, will I get funding today? I hope that I could just go sit down on my couch and bring out my computer and then just type in this company and then guess what? I'm going to put an application in. No, esas cosas, like what I say is those things don't work like that. It's not that black and white. And I see it every day. How? Because people come to me with those problems. Hey, I've applied here, but I didn't get financing. Or they didn't like what we were giving them. Whether it was a direct lender or not, it's a brokerage, yeah, but I already have those partnerships. I already have that direct lender partnership. There's a reason why it's better to do it this way, and I'll show you why and why it makes most sense. I'm collecting documents every day. I did that for about 3 hours earlier. Collecting documents, boom, boom, getting back into my email, boom, boom. Marketed from about 6 to 8, did my material, boom, boom. Then I moved to the next step. So let me come to the comments, but very quickly, 0% for 6 to 18 months. That is the business credit line program or credit line program. And you can actually liquidate the cash and then use it for several investments. So for those of you in the real estate space who are like, I need an SBA loan, but you can't apply it to real estate investments, apartment complexes, multifamily, non-owner occupied, at least 51% owner occupied commercial real estate. You have to prove, and they won't even approve you for it because it should be used for other means, not for real estate investments, Airbnbs, etc. are the common. So if you can't even get those, I tell people right now, you got to prove for an SBA loan of this amount, and you still were not going to get it. You weren't happy because you didn't get the amount that you wanted. Okay, that's one thing. But you're going to just sit on your butt and just not do what I've been telling you to do over here? I told you to go get a credit line, and I showed them specifically, like, I even put it in video. I put it in nice words. I took about 5 minutes I didn't even have to do that, but I took 5 minutes because I'm a very punctual person. I told the person the other day, I took 35 to 45 minutes on your file to put the email questionnaire response together. And they're going to appreciate that. They're going to see the perceived value. With me, you see more perceived value. So by the time you get an offer, you're like, damn, this guy made it easy. This guy literally made my life easy. Another person's going to make your life a living They're going to go out there, overpromise you, underdeliver you, tell you, hey, we can consolidate your merchant cash advances. Just come on over. We can try to approve you for a bigger loan and then use that loan to consolidate, pay off the full amount on one, and then get into a true first position. How about that? So you have a position. You have two positions. What amount of balance do you have paid off on those? What's the remaining balance? What's the starting? What's the ending amount? Has it been completely paid off? And then when we look at that, we go, okay, what we can do is try to net the difference. So we can use another advance or whatever, a loan, line of credit, and then we can use that to pay off this, net the difference, probably keep more cash in your bank. These are the ways you think about it, but the same thing is you're only getting yourself into the same situation you were just in. You're just taking on more debt again. And it's not like the rates are always changing and the terms are always changing. So you have to be careful at what growth, what speed are you growing? Stop taking off more than you can chew. Especially in the beginning, you don't know. That's the reason why business owners take these merchant cash advances in the beginning, because they don't really know what they're doing. And that may be the only thing. They don't understand the pattern of how to grow their revenue. You don't know that yet. You probably have never been in this position, worked in the same industry, and now you took a role. The person who works in this industry, works underneath an ownership's mentorship, guess what? That person's going to have, not going to say they're going to have absolute or even better success than that person who hasn't had any experience, but you can bet your butt that that person will be better prepared. So when they take the financing, they'll know, okay, how can I double this money? How can I triple this money? So it's not the cost that I'm taking on as a burden of 20 and I'm paying back 27. I'm going to make 30, at least 40,000 in this next projected month. And then in 2 to 3 months, I'm going to make this amount. And then what it'll look like on your profitability. I'm not just saying this, guys. I have all the documents of different business owners and I go through them before I submit them over to the lender. The underwriters come back to me, or the underwriter, boom, next step. I got to do this. All right. And I pre-underwrite files. So I more or less know the response they're going to give me. So that's the credit line program in the bio. Make sure you guys check that out. Good question. Can you use the 0% program to consolidate old cards? I mean, it is possible. I mean, it's similar to like a business loan or an advance. You just got to be careful on how you're taking on more debt. What are you consolidating? What are you actually refinancing? That's another thing. There's debt restructuring. But be very careful about how you're taking on different credit cards. I think a lot of people have this misconception that the higher amount usually means the better they're going to do, and they don't really look at everything. What you have to think about is your business plan, and think about, if I have 50, 70,000, the difference between somebody who has 50 to 70,000 is the person who has the plan together on how they're going to be able to consolidate, how they're going to be able to pay off other things, credit cards with other types of money. They have sufficient cash flow in their business to make those payments. Eventually, that's what I want to help you guys get to, is to be able to have your own business cash flowing itself like a cash cow, and you're not having to rely on me trying to get you guys a business loan and an advance. Now, if that's the case, I can understand your business is just growing so much that so much is coming in and that so much is going out. You're like, I just need to keep moving, and I cannot stop right now. I'm just growing at a pace that I can't even keep enough money into my accounts. Yeah, but make sure you're paying your credit cards on time regardless of whatever you can and can't consolidate, whatever you can not take care of. There are some things you can, some things you cannot, because you are over leveraged or overextending yourself. And if you have that mindset of, I'm going to use credit cards to pay off other credit cards, and it just doesn't end up working out for you, you got to explore other routes. And so this I can't get to specifically, because there are scenarios where a lot of people, I can speak with them on the back channel, but on email per se. I was on what's it called? Clubhouse. And they say the word back channel, and I'm like, what? At first I didn't know what that was a long time ago, and then it's like a DM. But you guys can go to my email. It is my first name, Michael, at viralfundingsolutions.com, and my site, it is viralfundingsolutions.com, and you guys will learn more about how you guys can get the right services. Is it Nick? Welcome in. How can you hire me? Good question. I don't charge people for consulting, for coaching. I know there are others who do that. I'd be very careful. Honestly, I could charge probably thousands. And I'd say thousands because, listen to this, thousands, I believe only if it were very niche focused. I'm not going to have somebody give me money for something that's very broad and you can find on the internet. No, it might be a conjunction of that, but I'll go even deeper. Excuse me. I'm not going to tread in that and go, hey, no, I don't even have people giving me money for coaching or consulting. I do consult a lot, but it depends on how we do that because my time and energy is very valuable. I don't take every phone call. I don't even expect a phone call all the time. It just has to be that situation where it makes sense. That's why I do Facebook DMs. There could be another mode of conversation. Maybe it's email, but I don't always give people that, let's get on a phone call, because some people are going to waste my time. And I know it so well because I've been in your position. And the difference that I have as opposed to everybody else, it's my story, it's my background, it's how I got to where I am. And if you guys haven't watched that bio, second button, you guys will get a great video, I believe, of my backstory of where I began and how I got to where I got to. Nothing phony, nothing fake, just me being raw with you. Hopefully it connects on a deeper level and you can somewhat relate. But the gist of it is, I started like most of you, 9 to 5. I grew up educated, went to school, university, community, played Division I soccer. And I did a bit of work before that, before college. And so not too much because I was focused on sports and academics. And then I went to that whole like working phase, transitioned over working for multiple companies, just trying to see different things. And as we are in our younger 20s, we try to figure that out. Like, what's our best position? And sometimes we have to go through that. So I went through different roles in manufacturing. I did construction. I've done warehousing. I've done different parts, not a lot of like retail, but I've worked in parts of that. Had extensive experience in just many different departments, logistics, with financing roles. And so I've been in those positions and I know how difficult it can be working underneath somebody else. I was actually working with the owner, and I was working for certain companies, helping out HP and then helping out like Peace Health and then a couple of other owners of different subcontracting companies as well. And I sat with them and they were showing me on their whiteboard how we can improve systems. I'm a systems guy. I'm a systems and a math guy. And I'm very good at intellectually seeing something on blueprint and understanding dimensions, understanding, okay, here's our process. Now, here's the systems that's going to govern that process. Is that a 1-step, 2-step, 3, 4, 5 to 6, 7, 10-step process, or what does it take? And then how can I help automate that transition? So from that system, the automation process then begins. Then I can then reverse engineer from my automation. That's where I like to begin a lot of the time. And I go, what could I automate? And then I work backwards and I go, what could be the systems I use to govern that automation process? And then what could I do here when I have these processes? But to some degree, you have to have the processes and the framework ready to go even before everything else is compiled. So I don't want to bore you guys with that. Just know that I don't hire people per se. I just, I believe in the free method, and I get that not always does free translate into finding something of even higher value. And there are points where it does make sense to charge, and I'm just not doing that right now with this business. And so hopefully you can respect that as well as everybody else in here. And if you guys want to consult with me, again, there's a process that I have, because if you want to work with the best, that's what happens. You want somebody who's going to be middle average, who's going to be just starting off. I can tell you guys, a lot of the agents out there, the brokers out there that I am associated or not associated with, I do my own thing, and you could bet your butt I deliver. And I see what they're doing, right and wrong. And it's like, I don't always, other times, you've done enough, I have to correct you. And so let me jump in there and help them out. And it's a learning lesson. And for others, they're just out there to get you. They're out there just making money in ways that they're not like characteristically. I mean, they may be a good person, but are their intentions good? Yeah, but who are they as a person? You have to question who you're working with. And I believe that with somebody like myself and what my backstory and what I've had to go through, I've gone through the whole being on food stamps. I've been there. Oh yeah, I've been on unemployment. I've had to freaking fill out those forms on the computer or in hand. And I was at a point where it was like my, I didn't even think I'd be going here today. I was at a very, very low point when I had another unemployment because of not of my issues. It was because of the company going down under. And I was getting paid, on unemployment. and I had the food stamps, and I felt very embarrassed. I very wanted to cry so bad at that time, and I'm the oldest of two. I have a younger brother, and I was always that person who showed him like there's a lot better, and I've always been in that position where I've had to as the older brother, and I've been doing that for such a long time. But those were just times, and I was getting those payments, and I was making sure I put my jobs that I was searching for, like we're searching for, whether you were getting something or not, or intentionally wanting to. And so, I received a letter back, and I go, oh, they said I had to owe them like hundreds upon 20,000 or so plus, and I'm like, what? I've been reporting. And so that was a day where I was like, man. And my face, if you would have seen it, was literally pale white. I didn't have to even look at the mirror to know. And that's the most frightening, probably one of the most frightening days of my life, aside from having my appendix taken out, aside from when I was a young baby and, just out of the womb, thankfully, and, having like some kind of breathing problem in the beginning, and having to go through not quote unquote complications, because that's not what we're talking about. It's just, I've gone through my physical transformations. I've gone through those hardships where, and it wasn't like an exact 100% appendix burst where it was like do or die right that second. Like some others have it even harder. I had it kind of like middle of the road, but I was so thankful and grateful of an experience like that to see, okay, this might be my last day. It might not be. And you appreciate days even more than that. So little things like these, like having a setback with your credit. Oh, my business credit. Oh, yeah, it's important, but take care of it. Don't just leave it. If you can do something, it might be too long, and you come back to it and you're like, oh man, this is not being taken care of. Now you're going to go through credit repair. Now you extend another 2 to 3 months. How much of it was taken off? You did yourself no good. And that's because you weren't keeping up to date. Can you buy a mini excavator with it? I mean, yeah and no. Again, I can't speak specifically to you because it depends on what you can get approved for. So somebody else may be able to get about 50,000, 100,000 plus. Now, if you're shooting for something over 100,000, whether it is new or used, I would kind of just bring your expectations down a little bit, especially if you don't have enough personal credit history built to even get a business credit card of that magnitude. So what you have, like even in amounts on your personal credit, can be a self-reflection of what you may get on your business credit. So without going too deep into all of that, I just want you guys to know that. Now, I want to leave it open for any questions. Please let me know in the comments if there is anything. I'll get going in about a minute. And while you do, the $26,000 per employee refundable payroll tax credit, boom, people are not thinking twice about that. I have a lot of clients right now who are going through the ERC program and getting those credits from being able to retain employees. I have a client that I'm looking at their email. I'll go back to them in a little bit. But if you are able to keep employees on your payroll, you can get rewarded by the government. And this is a program that was brought up by the Treasury Department, passed through the CARES Act and a few of the other acts thereafter, through Biden's administration, etc. But these are a few programs as well as many more, like getting an SBA 7A loan. I have a lot of those getting processed right now. People getting millions upon millions, even less than that. Your situation may be where you have to offer up collateral, getting a lot of term sheets, contracts, communication with the lender. Maybe it's a 3-way call or just a 2-way call between the two of you, where I set the two of you together and then I hear back from yourself and or the underwriter, and then we can progress from there. But then at that point I may need a little bit more documentation or something that needs to be revised again because the underwriter said, hey, this needs to be approved this way, so I need this signature here. I'm actually going to need to put another line here, so please can you send that back to me? It's such a huge world on this side. But yes and no is the answer to that. It's not black and white because I don't necessarily know. If I started asking you a lot of questions on that, I'd know more, but we're not going to spend time on that right now. Okay, so I just got word from one of my clients here. that they were trying to get their P&L and balance sheets from their CPA. Understandable. If you have somebody who takes care of your finances, you have a CPA on top of somebody else, just understand, okay, it's a process. If I have to speak with them directly or indirectly, just make sure that the documentation is how it needs to be done, taken care of, sent to me so I can revise it, and I'll analyze it, and then I'll make sure everything looks correct. There's numbers here that need to be adjusted or something different, then I'll make sure I get back to you on it. But I'll answer their question in a moment. But they're asking me if it's worth trying, is it worth waiting like for an SBA type of situation, and or trying to go conventional. So it just depends on what your situation is. It does come down to your situation ultimately, but there's another component. So you already know how much financing you need, but there's that also part of the brain that's going, at least I want to know what I can get approved for. If I can qualify for those longer term services, let me just submit to you all the documentation I have, look it over, get back to me if anything, or just send it over to the lender, which I do after I revise it. So everybody's different. And so like I have a lot of business owners right now, they can get bridge financing, an SBA 7A loan up to $5 million. And in the meantime, we can approve you for an unsecured term loan and or a line of credit or a merchant cash advance. Just depends on what you can qualify for, what looks more attractive. And so you go, hey, yeah, let's do all that. And then I'm going to have to collect all documents, but I'm only going to need about 4 to 6 months of bank statements for your unsecured term loan, line of credit, and or merchant cash advance. And then I'm going to need to see some, not even a voided check at that point. It depends on the service that we go into, but an application and just a few more things on perhaps the credit side if your company's taking those, merchant processing or whatever. We look at it from that point of view. But if that's applicable, if it isn't on those credit card statements, then we don't need to check them. And then later on, if we need to ask for a soft pull or a hard pull, it's there. If it isn't, it isn't. Soft pull, it's a soft pull. So let's see. We have anybody else? About 1 more minute. And never feel fearful. I don't think anybody is ever fearful of me. I'm a very, not quote unquote 100%. I don't want to say the word innocent. I don't think that's the right word. I am, but I'm not going to say that's the word to use. But I'm very kind. I'm very, when I'm off here, it's not like a talkative person. You're going to somebody who's cerebrally understands everything. And I spent a lot of time in math. I spent a lot of time on systems. I spent a lot of time understanding people. I understand why you may feel the way you do and why you may be thinking of the way you are thinking in terms of an offer, if that's the offer we get to. Why is there more problems even taking this offer? That I already addressed those. And so just having a better understanding of you and vice versa is going to help out in the long run. And it isn't a drawn out process for me. It is just, hey, simple. It's like you're talking to another friend or a family member for me. It's just really that simple. I had a guy today go, hey, and every time he answers the phone. And it's Christmas Day all the time with this guy. And whether he's not in a good position or not, it's like, hey, and he says my name, and it's like, dang, that's what I like. I don't need to hear that, but it's like, appreciate you, thank you. And I let them know, even when I don't say it right away, I'm thinking it. And it just makes a bigger difference when I work with somebody like that, as opposed to somebody who goes, I don't want to have an application sent today. I don't want to be able to do, God, I still get jittery, you would get jittery just hearing that from somebody. You're putting somebody in a nervous wreck situation. And it's worse if they're an introverted person. It's oh my, you're making me anxious. And I'm holding it together very well, but on the inside, it's I can still feel my muscles trembling a little bit. And I'm that's not what I want to hear, but I'm here for you at the same time. I understand. I like that you voiced your frustration and that you got it out. Do it. And if that helps you, it does. I'm not going to be that person who cusses. I'm not going to be that person who looks down or judges you. It's just, we are all at different stages in our lives where we haven't worked on ourselves personally. We're characterly flawed. The fundamentals are not there. We probably have to work on those few things, and then you will see a major difference. when you have so many applications, when you have so much burden, you have so much on your shoulders. But you're like, you don't understand me, Michael. I run a $1 trillion business, and I have to be on top of things. And if I didn't act like this, my employees wouldn't fear me. And then, no, what are we talking about? What are we doing? Like, you don't communicate like that. You don't show that kind of force to your employees. If I went into your business and I just observed, never said a word, because that's what I can do. I can walk into a business, just observe it, not even say a word, keep myself shut, and then just kind of just visually see the things that are happening, how everything is operating, products and services, the marketing, the finance behind that, who's actually taking care of your finances. Because there's 3 things that us business owners, and I was there in the beginning, so I'm no better because I've been there. Don't think that this person is like, I'm not a cocky person. I'm confident, I'm certain. And those happen simultaneously. You're confident, you attain more certainty. If you can be certain enough, that shows you have confidence, but you can attain more, or you can attain that confidence. And so 3 things they lack. Financial aptitude. And I don't expect you to be like, I gotta be a CPA, I gotta be working for the Wall Street. Like, no, I'm saying you gotta understand your business's finances. Like, why am I coming to you and you're telling me you don't understand how you're using this money? Or you don't understand what your finances are. You don't even understand your payments. You don't even understand your own debt. You don't even understand your cycles, your budgeting, your spreadsheets. You don't even understand how you're allocating your costs. And you're trying to get an SBA loan just to get an SBA loan? Well, if the lender comes back to you and me and they tell me, hey, we need these questions asked and answered. Can you get them back to me, please? Oh, man. So they put me in a situation to say, if I'm going to take out of this $2 million I'm going to give you, can you tell me right now what 500,000 of that will be used for? Oh, and you're coming back to me and going, I thought it was, that's where you went wrong. Even if you didn't say it, but I thought, boom, done. It's not going to exactly like decline you, but if you don't have that set up, that can be more time that we draw out the process. And we don't want that. So finances, I'll come to the comments in a little bit. Actually, now, I am not based in Los Angeles. I've been there. Amazing place. I actually watched a video on, I forgot his name, but Asian dude goes to Alameda. I think Alameda, yeah. And he was in Silmar, and he was trying one of the best taco spots in the food truck. So I was like, when I'm in Los Angeles again, I'm going to need to make a stop there, one or the other, or the two. And the food just looked amazing. And anyways, I'm getting sidetracked. So I'm based in Washington. I'm not going to give any kind of exact locations. Just know that I'm based in Washington, closer to the border of Oregon. So I can transition into Portland rather quickly, Portland, Oregon. Well, I can do brokering in all states. Here, I have to decline. Sorry, I have an invite. I don't really necessarily know what's going on there, but I declined it. I could do all states. Just depends on what you're trying to do. I can service all 50 or so states. Just depends on the loan and also the lender. But yeah, I can do that. Commercial loans. So whether it's that, real estate, conventional, non-conventional, I can do quite a bit. So it just doesn't limit me to one state. It's different than a real estate. Perhaps broker, real estate agent works a little bit different. But for now, that's a different form of licensing. It's not really a necessity. Now, not to say it wouldn't be in the future, but yes, I can service multiple states. I've done a lot of deals in Los Angeles, a lot of real estate investors. I've done that plenty. I have a great friend who has property in Los Angeles, but is based in Boston. Great guy. Just came back from Italy. I talked to him quite a few times. And so, yeah, whether it's Louisiana, Maryland. I have a guy from Maryland right now. I have a guy from Louisiana. I have a person from California, anywhere in California, really. And it just depends on the service. And I have people from the North, Pacific, Northwest, from the East Coast, West Coast, Midwest, anywhere. And we all come together as one. And we just form this whole great foundation and making sure that you have what you need. I don't just leave you at, hey, I took 50,000 today, bye. No, there's more. Like, in the meantime, let's work on other forms. Let's look at the credit, cash flow, and collateral. So if you're looking at establishing your cash flow better, all right, what's your plan there? And then in the meantime, can we also work on your credit? Okay, how do we work on credit? All right, well, how do we work on collateral? What are you looking to do there, if anything? What's your future plans there? What can we take equity out of? What can we do from a real estate property financial situation? We're looking at consolidating loans. So we use real estate to take out equity, make the right type of payments. There's so much. So I think did I list those three? No. So the three again, finance, understanding your structure of your business. You really want to understand how to grow your revenue month to month, because that's what it ultimately will come down to. We can have plans and say, I want to have this profitability. This is what I want to do percentage-wise per month. I have a business plan in place. I know what could work, what couldn't work. You're like, yeah, but have you broken it down to a minute to microscopic level? Like when I say microscopic, I mean like who you have in front of you working with you. If it's just you, do you have the right, again, processes, the systems, the automation if necessary? Do you have the tools and supplies? Do you have the workspace? Do you need another building? Why do you need another building? And so there's so much we can categorize there. So understanding those two, the finances, understanding your revenue, how you're going to be actually generating that money is very important. And then it kind of goes back and forth with the third one, but those two are huge. Finances, understand that, understand your depth of knowledge on how you are going to help generate that type of revenue, and then just really allowing to be open. And I could have said something else here, but I want to make this point that most people are not open and they close themselves. So when you're getting a loan, just really understand the basis of being open-minded, because if you're not, you just close yourself off and there's something that you saw, you're like, no, but there was something that could have been improved and you just didn't do it and it's your own fault. Well, guess what we got? We got what we got because you didn't choose to do what you needed to do after even somebody explains it to you. So I could have said another thing for that third part, but just understand that you should be able to understand your finances. If somebody else takes care of it, do it. Outsource it to somebody. Understand how you can grow your own business's month-to-month revenue. That a lot of it falls back on you. Understanding that. And if you're going to put people in position to fail, well, you put yourself in first position to fail ultimately before you hired on anybody. So think about what you're doing, make strategic moves, understand that, be more open-minded, collective, work on yourself, and you're going to see a huge difference. And I could have put a third option there, but let's leave it there. Anybody have more questions, or I will get going? Honestly, when people ask me about other loan brokers, it's not that I wouldn't recommend somebody. It's just that I know my true value. I see a lot of fake people out there. And people are looking for quick hits. They're probably looking for somebody locally they can meet in person. They don't always got to meet in person. I'm not the guy that goes, hey, let's go meet for a cup of coffee. I don't even drink coffee. I probably will drink tea. I haven't been having tea for the last month or two. And so that's a very American thing, maybe British thing. I grew up in Orange County, so I'm just like you, Americanized. But I also have a background with being Hispanic. I'm Salvadorian / Mexican American. And so I'm very cerebral and I'm very thoughtful about how I do things, but don't put me in the same category as somebody else, because traditionally that's what you like to do, or that's what you like to traditionally see. And so each person is different. I bring a lot of power to this space, and I've been doing it for a while. And so I wouldn't be here talking to you guys if I was just speaking out of my butt. So let's do about 1 more minute. I know I said that some time ago, but the questions keep coming in. But about 1 more minute, give you guys a chance. So again, bio, link click, fill out the questionnaire form, and then I'll be able to evaluate, analyze, and give you a proper response back via email. For those of you who have been following me for some time, as well as responding back to my emails, thank you. You guys don't know how much that actually really means, because it means the whole world. I just told the business owner earlier before I got on here. It means the world to me that you send me this like this. They made a mistake. They revised it. They sent it back to me no later than 5 or so minutes. Done. They had the time to do it. Even if it weren't that quick, it's like, I'm weighted. I'm going to do it. I'm going to get it done. Boom. Taken care of. Simple. No friction. No resistance. Get it done. And that's it. And if it doesn't make sense to you, don't become a crying baby, because people, they just go their own ways. Oh, I could tell you guys so many people who start an application and they go ghost, or they get an offer and they just disappeared. Oh, they want my help now. No, you're not going to get my immediate help. Where were you 6 months ago? You think I actually need your business? No. Doesn't obviously look like you need my business, or you didn't even care about me. So why should I ask about you? I apologize for that part, but like I said, I hardly ever cuss. And so why should I be apologetic? Why should I be very sympathetic or empathetic to your situation? It's more pathetic when you don't respond back. That's being unaccountable and irresponsible. That goes for anything in life, not just business financing. So 30 more seconds. I know it's been past a minute. Give you guys another second or two to chime in. So it's normally the person in the mirror you got to look at. If I look at the mirror and I go, this is me? How am I treating that person? I'm trying to get a loan and I'm like acting like a fool. Correct yourself. Like I said, that comes back to the whole, you're generating $5 million a month. Well, yeah, that's important, but who are you? Who do you think you are? You're just some clown out there. You're just some person who has anger issues. You're just some person with an ego. You have frustration. Well, if I never had this, I wouldn't even be in the situation that I'm in. You think you actually needed that to get to where you are? You probably did, but others didn't. And that's not a factual thing that you actually need all of that to get to this. So take it from somebody who is introverted. Take it from somebody who's worked behind the scenes for a long time. Take it from somebody who is very diligent with their things. Nothing phony. So that's everything from me. Appreciate you guys. Thank you for tuning in. Keep looking out for my content, YouTube channel. I'll keep releasing video content. I did do another one, I believe, today. I haven't broadcasted it. I wanted to give you guys a break if you're on my email list. I don't want to just keep sending email after emails, reminding you guys of these broadcasts. And there's more specific ones. Blog, always coming out with new content. I'll probably be blogging a little bit tomorrow morning. And social media posts, everything else included. That is it for now. Talk soon. Bye.